Okay, it's Sunday the 6th of November, so let's have a look at the Australian dollar, US dollar for the trading week ahead. First thing to go over is we have the US presidential election next week. It's likely going to influence a lot of markets, so you just want to be a little bit careful. Certainly going into the election, I wouldn't be looking to hold positions overnight. There's no real way to guarantee election results. A lot of people tried to do it on Brexit, and a lot of people lost a considerable amount of money. Okay, so looking at this market now, we have been looking at this price squeeze, and you can see the market coming up on sloping support and then rejecting against the key resistance levels above. The market is still doing exactly that. Sloping support has actually been maintained all the way back in May and even in January of this year. So it's been going on for quite some time. And basically what we're looking for is for the market to break out either to the upside or to break the sloping support to the downside. Now for me, especially with things like triangles, when you're trading patterns that have breakout moves, I like to see the market break out and then come back and retest the level, accept, and then continue on before I take it as a break. The reason for that is very, very often you're going to see false breaks of levels when you see things like price squeezes. It does that. The market does that purely because it breaks out to take out stops. So everyone who's short up here, it breaks out, takes out the stops, it triggers in all the long positions of breakout traders, and then the market just crashes back down once again. So I like to see level hold after the market breaks. So down here, I would need to see the market come back up, retest, and before it breaks down. It happens this way very often, not every time, but very, very often. And you will see the market break, come back, and give the retest. Okay, so looking at the price action also, we have, let me just mark this in, round about here, in between the price action as it is squeezing, we've created what I would call basically a pivot point. So the market is coming up, reacting off of this level, breaking through, holding on the level, breaking back through, holding before it falls away. It comes back up, breaks through, rests on this level. I can actually put it in down here just a little bit also. It breaks through, comes back up, tests, and it's continued to do this all the way back. So for me, this is a support and resistance level within this price squeeze. Other than that, it's the key resistance up above that I'm interested in. If the market does break out, our next key resistance is up here. Sort of the 7800 level up to the 7830 level. This would also be a good area if the market does break out to look for that resistance. So the market breaks out, reaches the resistance, looking for the market to come back down before you then look for that bullish price action. Now down below our key support levels, well, where do we have? Let me just have a look here. Okay, so our first key support level, if the market breaks out, is really it's coming all the way down into sort of 75.15 down to 7,500. Down below there, really, we have another strong level. Right here. So if we see the market breaking out to the downside, the first real key levels of support I'll be watching is down here with another strong level below. That's where I'll begin to watch for those bullish bounces, looking for price action to line up with the trading plan to put me into those sort of positions. But that's really everything I'm watching on this market. The key thing is we're still seeing this price squeeze. The market still hasn't gone anywhere. The price squeeze may fizzle out. The market may just end up drifting right on through it. But whilst it is respecting the market, the price squeeze like this, I'm looking for or waiting for the breakout. Really, the key level is this sort of pivot level down here until that happens. Okay guys, so hopefully that was helpful. As always, I'm James Orr, and thank you.